You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 17th day of April, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael comes on in about an hour, he'll show you. He'll walk you through step by step on the screen. It's a piece of cake. We'll get your indicators up and running today. Tomorrow's a holiday, and then you got the weekend. So you'll get 5 consecutive trading days next week. But because of the holiday and the weekend, as a bonus, you have 3 days to get familiar with the indicators before your training actually starts on Monday. Sweet. 8 days instead of 5. And of course, there's no credit card required. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy. Can't join live, but want to get caught up later. You can do both of those via our YouTube app, our YouTube channel, which is easy to remember. YouTube.com, you already got that part, /CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know not only who we really are, but how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have and to let you know that we've been around the block a time or two and we're actually still here. youtube.com/CFRN. This is our schedule for each afternoon broadcast. So we'll dive right into our daily devotional. Now, the devotional that we're on this week, Holy Week and Easter. Now, we're running a day behind because Monday we did Palm Sunday. And then Tuesday we did Holy Monday. Wednesday we did Holy Tuesday. And now today, Thursday, we're going to do Holy Wednesday or Spy Wednesday. When we're done, you'll understand the Spy Wednesday part. Our scripture today, Matthew 26, verses 1 through 16. I'm going to share with you from the Message translation. When Jesus finished saying these things, he told his disciples, "You know that Passover comes in 2 days. That's when the Son of Man will be betrayed and handed over for crucifixion." At that very moment, the party of high priests and religious leaders were meeting in the chambers of the chief priest named Cephas, conspiring to seize Jesus by stealth and kill him. They agreed that it should not be done during Passover week. "We don't want a riot on our hands," they said. When Jesus was at Bethany, a guest of Simon the leper, a woman came up to him as he was eating dinner and anointed him with a bottle of very expensive perfume. When the disciples saw what was happening, they were furious. "That's criminal. This could have been sold for a lot and the money handed out to the poor." When Jesus realized what was going on, he intervened. "Why are you giving this woman a hard time? She has just done something wonderfully significant for me. You will have the poor with you every day for the rest of your lives, but not me. When she poured this perfume on my body, what she really did was anoint me for burial. You can be sure that wherever in the whole world the message is preached, what she has just done is going to be remembered and admired." That is when one of the 12, the one named Judas Iscariot, went to the cabal of high priests and said, "What'll you give me if I hand him over to you?" They settled on 30 silver pieces. He began looking for just the right moment to hand him over. We often think of Holy Wednesday or Spy Wednesday as the day Judas Iscariot betrayed Jesus. Judas offers to help powerful religious leaders harm Jesus in exchange for 30 pieces of silver. And the leaders jump at the opportunity. Judas will be their spy. But what prompted Judas to betray Jesus? How did he go from follower to betrayer? Matthew, Mark, and Luke cite greed as a motivating factor in Judas' decision. But there could have been a multitude of reasons. Some see Judas' name, Iscariot, as a wordplay referring to the Sicarii, or the Dagger Men, a sectarian group of Jewish zealots who worked to violently overthrow the Roman occupation. Was Judas angry with Jesus for refusing to go to war? Perhaps. Later in the story, we see Judas' extreme remorse, but the authors give little insight into Judas' motivation or mindset during the events of the week. One thing the authors make clear is that Judas' actions are incited by God's opposer, Satan. Luke 22, 1 through 6. What does that mean? Who is the Satan? And how do spiritual beings like the Satan engage with human beings in the biblical story? We'll be picking up on this next Monday, because again, we're closed tomorrow. Let's pray. Heavenly Father, as you prepared to face the cross, your love never wavered. Help us to love you with undivided hearts, like the woman who poured out her precious gift. Guard us from the spirit of betrayal and selfishness. Teach us to honor you with our lives, offering all we have in worship. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Thursday. Time now for me to give you the numbers from around the world. And we'll start here in the U.S. with the cash markets, or the indices as they're called. All right, starting with the Dow. Down 478 points. That's basically 1.25%. The Nasdaq is down 16. S&P 500 is positive by 18. And the Russell 2000 up 6. In the commodity basket, crude oil up $1.97, trading 64.41 last. That's a gain of a little over 3%, or $1,940 per contract traded. Speaking of oil, if you have what's it called now? The streaming service. Is it Paramount? Maybe that's it. But anyway, the show's called Landman. And it's not for kids, it's adult entertainment. But boy, does it take you into the belly of the patch and all that goes on behind the scenes in the oil industry. Again, there's some vulgarity, both in speech and visuals. But if you're looking for intrigue and an opportunity to really learn about the oil industry from the inside out in a fictional setting, you'll probably enjoy it. Gold is down $35.20, trading $3,311 last. It's a drop of a little over 1%. Silver down 63 cents, trading $32.33 last. That's a drop of almost 2%. In the Asian markets at the close, the Nikkei posted a gain of 457 points, over 1.25%. Shanghai rose 4. The Hang Seng gained 338. That's over 1.5%. And in the European markets, at the close, FTSE remained basically unchanged on the session. The DAX dropped 105. The CAC fell 44. So, we had a green day in Asia. It was a red day for the UK. But it is a mixed Radio Thursday here in the US of A. We've got only one in the red, the Dow, but it's down over 400 points, or basically 1%. Now the NASDAQ, it's not setting any records. It's up 1.5 points. Oh, now less than a point. They're calling it unchanged on the session. S&P up 24 and Russell up 6. So we like to see all four of the major indices the same color. We don't care if they're all red or all green, because with the futures you can be long, short, long again, all in the same hour if that's what the chart in front of you is telling you to do. When they're all the same color, you have better follow through on your trades. When markets are mixed, as they are now, you get a bit of a tug of war going on. And what's really interesting is the Dow now just dropped a little more, down 415 points. Typically, U.S. markets will rally into a holiday weekend. So now we got two in the red. The NASDAQ just went red. And now it just went green by 2 points. So you see that tug of war, that back and forth? Yeah. Doesn't make for the best trading conditions, but you got to trade whatever the market hands you, right? Okay. News, what do we got? Winner lab dinner. Researchers in Japan have produced nugget-sized chunks of chicken using animal cells, signaling a breakthrough in the lab-grown food production. Wow, that doesn't even sound good. Lab-grown or cell-cultivated meat has been around over a decade, offering an animal-based protein option that is not derived from slaughtered animals. Previous attempts at lab-grown chicken have been made with cells taken from living animals to create chicken strips less than 1 millimeter thick that are then bound together, formed and pressed. Creating thicker portions of meat is difficult without blood vessels, which help oxygen and nutrients keep tissue alive and healthy. Scientists at the University of Tokyo invented a process that mimics blood vessels, therefore enabling tissues to grow stronger, and produced a bite-sized chunk of chicken at 10 grams that indicates improved texture. I'm sure this will be the next chicken nugget at McDonald's. It won't take long. The team believes they could build larger chunks of meat using the same process and even create functional organs. You see, any time throughout history that man has tried to play God, it never ends well. Lab-grown meat is estimated to be on the market in 5 to 10 years, with the potential to reduce the environmental impact of the meat industry. Oh, these progressives, my goodness. We all know that AI is the hot button now, but artificial intelligence startup OpenAI released 2 advanced models yesterday. OpenAI 03 and OpenAI 04 Mini that can think with images for the first time by integrating visual data directly into their reasoning processes. Both models are available to paying users. OpenAI o3 and o4 can analyze and reason about user-uploaded sketches, diagrams, and other visuals, even low-quality ones, similar to solving math, coding, and science problems. For example, they can explain economics problems from photos or solve puzzles from drawings. The new models take more time to deliberate before responding, reportedly resulting in more accurate and thorough answers to complex multi-step questions involving text and images. They also include web browsing and image generation and were trained through reinforcement learning, which teaches the system via rewards and penalties. It's alive. OpenAI is also in talks to acquire AI-powered coding assistant Windsurf for nearly $3 billion, which would be its largest acquisition to date. OpenAI seeks to strengthen its position in the AI coding market and compete more directly with rivals like Anthropic. This thing's about to spin out of control, guys. It's just my opinion. President Trump turning up the pressure on Federal Reserve Chair Jerome Powell. He said yesterday in a social media post that he should lower interest rates and that Powell's termination cannot come fast enough. The president's comments, posted to Truth Social, came one day after Powell said the central bank will wait for greater clarity before considering any rate adjustments, as he warned Trump's tariffs would likely generate higher inflation and slower growth. And all his leftist buddies looked at each other and smiled that Joker smile from Batman. He predicted those twin developments could create a major dilemma for the Fed, which is obligated to keep prices stable while also maximizing employment. Powell said we may find ourselves in the challenging scenario in which our dual mandate goals are in tension. Now keep in mind, the Fed is not a part of the federal government. It's a privately owned corporation. I love Trump's remark. His termination can't come soon enough. Trump today said Powell is always too late and wrong and should have lowered interest rates like the ECB did long ago. That's what I've been preaching for since the day they started raising them. He should certainly lower them now. Powell's termination cannot come fast enough. Powell's time as chair expires in May of 2026, and he has said he intends to serve out the entirety of his term. Treasury Secretary Scott Bessent said earlier this week he expects to start interviewing Fed chair candidates in the fall of this year. The Fed chair on Wednesday again reiterated the independence of his institution and his own job, saying it's a matter of law, and pledged not to act in response to any political pressure. He did discuss a case now before the Supreme Court that is testing Trump's ability to remove board members at other independent agencies in Washington, D.C., a case that some Fed watchers worry could threaten Powell if the administration wins. But Powell said, I don't think that's a case that will apply to the Fed. Nevertheless, the central bank is monitoring it carefully. Trump started his second term in office by softening his criticisms of the Fed's monetary policy decisions and made it clear he didn't intend to fire Powell. someone he criticized repeatedly during his first term. Yeah, well, if the Supreme Court rules in his favor, bye-bye, Jerome. United Health. If you have shares of United Health, sorry to bring you the news that they're down 23% today. United Health stock cratered as much as 22% after its first quarter earnings missed expectations, and the company cut its full year profit guidance, dragging down the blue chip Dow Jones Industrial Average. See, the Dow only has 30 stocks, one of which is United Health, and that explains why the Dow is down 400 points on the session. The health insurance giant now expects adjusted full-year profits to fall in a range between $26 and $26.50 per share, down from its prior forecast for adjusted EPS to come in between $29.50 and $30. United Health down $134, $135 on the session. And the session ain't over. Alphabet's Google illegally dominated two markets for online advertising technology, according to a federal judge today, dealing another blow to the tech titan in an antitrust case brought by the U.S. U.S. District Judge Leonie Brankema in Alexandria, Virginia, ruled that Google unlawfully monopolized markets for publishers, ad servers, and the market for ad exchanges, which sits between buyers and sellers. Antitrust enforcers failed to show the company had a monopoly in advertiser ad networks, she wrote. The ruling could allow prosecutors to argue for a breakup of Google's advertising products. The U.S. Department of Justice has said that Google should have to sell off at least its Google Ad Manager, which includes the company's publisher, ad server, and its ad exchange. I don't know why that made me smile. It wasn't a Joker smile, but it was a smile. Target CEO plans to meet this week with, I can't even believe I'm saying this, Reverend Al Sharpton, whose civil rights organization has encouraged consumers to avoid U.S. retailers that scaled back their diversity, equity, and inclusion initiatives, also known as DEI. A National Action Network spokesperson today confirmed Sharpton planned to see Target CEO Brian Cornell in New York, but declined to provide any details about the meeting, which was first reported by CNBC. Target did not respond with a comment. Okay. I don't shop there anyway, for a number of reasons. Okay, Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, silver. Currently, we're in week 350. And as of last night, we have published over 19,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 6:30 a.m. Eastern. She will update it and finalize it for the week this afternoon or early evening, maybe sometime tomorrow, because she has the day off. So, at the time she did the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern, We've issued a total of 39 Logic 247 alerts. At the time of the recap, we were still waiting on the outcome of 5. I suspect some of those may have triggered at this point. We'll see. We'll find out this afternoon when she does the recap. So, at the time of the recap, we had 34 actionable alerts, of which 3 or 9% would have been stopped out, again based on market structure and the simple process we teach all of our passport holders in their one-on-one mentoring sessions. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, quite often additional targets, and then a final trade to target. The purpose of the alerts, yes, you can trade them. It's kind of hard not to, right? But the real reason for the logic alerts is to help you learn how to read a chart. You want to be able to look at a chart of any market, any time frame, and along with the use of our humble indicator set, instinctively know what the next high probability move is. You need to be able to spot where the next major resistance is, potential resistance, the next major potential support. In doing so, you reveal the windows of opportunity that lie in between. The logic alerts can come out anytime around the clock. We have traders around the globe, futures trade around the clock. Our day session is their night session, and vice versa. So, we've now broke 19,400 alerts. That means we've got just under 600 more alerts before we hit that big round number at 20,000. So please make sure you use the logic alerts now to learn how to read the chart. Long before we had Logic 247, we had our original alert service, the concierge trade alerts. They're different in a number of ways, but the main thing is they have been published. I've been striving to publish them for the last couple months, 5 minutes ahead of the Globex Open. But because of the volatility that's baked into the market with all the tariff stuff, and the fact that we're in earnings season, 2 nights ago, when the markets opened, well, I showed it to you yesterday, price gapped down all the way to the short target. So I said this yesterday, and I posted it in the discussion group, that I'm going to wait for earnings season to end before I go back to publishing the CTAs 5 minutes ahead of the open. Okay. So last night they came out at 7:48 p.m. Eastern. What that means is all of our members and all of our trial members had all of these targets an hour and 48 minutes after the market opened. See, we all know we're in the Thursday session, but the Thursday session began last night at 6 p.m. Eastern. Okay. So all members and trial members had these targets for the S&P, for the Dow, for the Russell, crude oil, the NQ, gold, and silver. So with that said, let's go look at the chart. Charts. We'll make it plural. Okay, blue and climbing. Now, where's resistance? It's at the 38% to reverse fib and the step line. Where's support? at blue and climbing, 52.49. As I said earlier, prices or the markets typically rally into a holiday weekend here in the U.S. But if the Dow drags down the other markets, I don't know, maybe history doesn't repeat itself this time. We'll see. So we're in a downtrend, which is why we have reverse fibs instead of regular fibs. In an uptrend, you draw your fibs from the low to the high. In a downtrend, which we're still in, you draw your fibs from the high to the low. We've had a leg and a retracement, a leg and a retracement, a leg and a retracement. And now we're getting another leg. But this is a big development that we now have blue and climbing below. So right now, price is trapped. And then we also have an inside day. That means today's low has not taken out yesterday's low, nor has today's high taken out yesterday's high. Now, on your smaller time frames, you can't see some of this important critical information. Also, institutional investors, the deep pockets that actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. They can stay in a profitable position far longer than you or I would be comfortable with or have the margin to cover. And they can withstand a much deeper drawdown than you or I would be comfortable with. So, we got a green candle, but we got resistance right overhead. Now we banged up against it, and then we sold off, and now market's attempting to mount a rally in the S&P. But again, look at where we closed yesterday and where we are right now. That's why we're up so little on the day. So whether you trade futures, stocks, crypto, Forex, ETFs, I suggest you spend 2 minutes with the daily chart. Look over the shoulder of the deep pockets that move price, see what they're doing, and most importantly, identify major areas of resistance and support that you can't see on the smaller time frames. Then after that 2-minute look, then go to your time frame you execute in and do your thing. Okay. Now, I posted a lot of charts and a lot of commentary. This low yesterday was this low from last Friday. How far do you, when I always say you got to look left. How far left do you look? As far as you need to. Boom, right there. Now, price is up against a weekly trading zone. Now, when price rises to a zone, we expect resistance till proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. The zones are published Monday morning at 6:15 a.m. Eastern. Once the zones are posted, they're carved in stone for the entire week. They don't change in any way whatsoever. So, the zones published this past Monday morning. Here it is Thursday, still doing their job. Got resistance, resistance, resistance. Now, one of three things happens when price encounters a weekly zone. 70% of the time, it's going to be consolidation. 20% of the time will be rejection. 10% of the time will be the slice. So, I drew in this window of opportunity much earlier today, and it will remain valid until triggered. Now, because it's a short, it's possible it never triggers. But if it were a long, there's no doubt it would trigger. Just like this one up here. Okay. Eventually it will trigger because the indices always move higher over time. Yes, we can have downtrends like we're in now. That's how price travels, in legs. Leg retracement, leg retracement, leg retracement, leg retracement. But because with the indices, they're constantly reshuffling the deck, getting rid of the weak companies, bringing in the strong companies. So over time, they're always going to go higher. You may think, wow, that sounds like a rigged game. It is, intentionally. And you should take advantage of it if you're young enough to take advantage of it. If you're in your latter years, you don't have the benefit of time. Okay? In 2005, was it? 2007? Yeah, I think it was 2007, 2008, somewhere in there. If you go look at the cash market on TradingView for the ES, we put in a low at 666. And since then, you know, about 18 years later, we've gone from 666 to 5,329. And we're in a downtrend. Okay. All right. The vertical lines separate today, Thursday. Here's Wednesday. Here's Tuesday. Here's Monday. And then I showed you back over there Friday. So here, we don't need this. That was put on yesterday to show this double top, okay? And we said in order for price to move higher, we've got to break that double top. And we did. Made it up to the zone, consolidated, made it up to the target, the long target, okay? Now we spiked it by a little bit. See where the red line crossed below the step line? It's basically those highs right there. Okay. I was keying off this high right here. But as you can see, there was plenty of opportunity to get your goal for the day. Even if you only traded this candle right here. It opened at 53.49. So we'll call it 53.50. And it ran up to 53.71. So a 21-point candle. You only need 2 points to get your goal for the day. When the market finds resistance, it always goes and looks for support. Okay. Now this support came in at a bit of an unusual spot, but not really. See right here where red and falling turned to blue and climbing? Okay, that's an important price, important area. Now as this red candle comes down, there's potential support at the step line because it's directly below price. Red and falling is directly below price. Both of those are potential support. If price trades through that support in sympathy with the Dow, then a break of this low right here gives us this marvelous window of opportunity right here. Oh, we're talking something like 52.95 down to, we'll call it 52.87. So about 8 points. Worth waiting for. Now, if price were to break this zone and start to head higher, you've got potential resistance here. So your trade would be something like 53.62 to 53.64. Go for the day. On the Dow, which as we said is taking a whooping. It's trying to rally here, but it's running right into resistance. This window drawn in yesterday filled beautifully. Okay, you see it broke that double bottom, and the bottom of the window was just above this low right here. Now we ripped right through it, and that's okay. Just looking to get your goal for the day. Came down to the zone and found support. Support will always send the market looking for resistance. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon on a normal week. If price is below the 30-minute BBC, it's trying to get to the zone below. If price is above the 30-minute BBC, it's trying to get to the zone above. Now, this window here, which was drawn for the purpose of this short opportunity, you'll notice as price rose, that window worked beautifully in the opposite direction. Does that happen often? Yep. Watch for it. Watch for it. All right, so we opened here last night. Price is trapped. We got support below. We got resistance above. But once red and falling turned to blue and climbing, off we go. We make it through the BBC. Now the pullback to the BBC holds more often than it doesn't. But eventually it will trade through. In this case, after consolidating, we traded through, got to the zone, consolidated there for a couple hours, reached up, filled that window in the other direction. That's really important. In the other direction. We put it there for the short, but it served us so beautifully on the long. Both sides. Okay. Now, this resistance did come at what some would say is an unusual spot. We get below the BBC, we drop all the way to the short target, we go through the short target, we go through the zone. But now red and falling has turned to blue and climbing. So now price is trapped. Got resistance overhead at the BBC, support at the step line, support at blue and climbing. On the Russell, this is where we opened last night, and this window that was drawn yesterday, this move, it was for this move here. And I posted a bunch of these in the discussion group, so feel free to go there and take a look if you have access. Remember, we have a members discussion group and a trial discussion group. And I'm constantly sharing stuff from the members discussion group with the trial discussion group. So it served us well on the way down and again on the way up. Then once we got above it, it filled and it filled and it filled. And then we hit the long target. Consolidated at the weekly zone. Overcame these highs. And this high failed to take out this high. So you got a high, a lower high, and now a lower high. However, we are above the BBC. Blue and climbing has now entered the picture. So the next major resistance would be up here about 1896. And we're already, we never did hit 94. But that would be so close, 94 to 96. I don't know that I would be really interested in that. What about if we took out this high? 88 to 99. Is that right? See this high, 89. So you don't want to get long right off that. You got to let it move up a little bit. So we'll go 98. Yeah, not enough room there. And then you got potential resistance here, here, here. So this is a market where I would just go find something else to trade. NQ. Here's where we opened last night. Price trapped just like the others. We get above the BBC, right in the back of blue and climbing, and it takes us right up to the target. And we actually spike the zone a little bit. Okay. Now, see where the red line got below the green line? This is actually invalidated by these two candles. But as you can see, that high, it's right where the bearish cross happened. Important prices, important areas are almost always tested. So resistance is going to send the market looking for support, which it found pretty much to the tick at the short target. Based off this spot right here where red turned to blue. Consolidated at the zone. We've now bounced up to the BBC. Remember, the pullback holds more often than not, whether it's pulling up from below or pulling down from above. Crude oil getting a little wind beneath its wings here. Here's the open. Had a leg, a retracement, a leg. Took us right up to the target. And then we spike the zone, and price always reverts to the mean. In our case, the mean is green. It's called the BBC. And the pullback holds more often than it doesn't. Even when it spikes it like that, you got to look at where the candle closed. So some would go, well, that didn't hold. Oh, it held. Trust me, because all these candles are still touching the BBC. So then we get this nice leg, and we get this nice retracement, where it comes back to the top of the long target. Remember, we trade through, we pull back, support. This is really support times 3. The zone, the BBC, and the top of the long target. Now the highest zone for the week is up at 67.25. Probably won't see that, but markets will open tonight, I'm pretty sure, but we won't be here tomorrow. Okay, gold. Okay, now we didn't hit the target here because, remember, it was an hour and 48 minutes after the open. So there's 30 minutes, there's an hour, there's an hour and a half. So it was during this candle, okay, that the CTAs were published. Blue and climbing gets directly above price. That becomes resistance because it's probably on its way to turning into red and falling. And what do? We spike the BBC and we hit the short target. That sent us back up to resistance at red and falling, which sent us back down once again to the short target. We traded below the target. See right here where price went back to the left side of blue and climbing? It's right there. And so then when we move back up to the BBC, we get a spike that fails to take out that high. That's a sign of weakness. When you see those big wicks to the upside, look for price to move lower, and it did, to the zone that was published Monday morning at 6:15 a.m. Eastern. Support will always send the market looking for resistance. Now, keep in mind, this was a green candle way up here, but by the time the 30-minute candle closed, it was back below the BBC. The pullback held. Okay. We could be getting the same thing here. We could spike perhaps up to the bottom of the short target. You see the step line right here where it crossed blue and climbing, turning blue and climbing to red and falling. Okay, that's an important price, important area. We're at resistance. The step line is about to cross red and falling. In doing so, red and falling may curl up and turn into blue and climbing, which one is bearish, red and falling, blue and climbing is bullish. Silver. Here's the open last night. But again, it was an hour and 48 minutes into the open before these targets were published. So 30 minutes, an hour, hour and 30 minutes, 2 hours. So this candle right here opened at 32.83 and dropped to 32.73. That's $500 per contract traded. Now that support came from right here. See that? Okay. But the rally failed to take out the opening highs. Sign of weakness. Sends us down to the short target, through the short target, all the way down to here. Support sends us to resistance at the weekly zone. Resistance sends us looking for support. Okay. We overshot this low by not much. What was the low? 32.27. What was the low here? 32.25. So a penny and a half. However, with silver, it only takes 2 pennies to get your goal for the day. Support sends us to resistance, which sends us back to support. We spike that low just a little bit. Okay, right here. And buyers have now pushed us up to the BVC. We're above the BVC. And so beautiful trade right here would be 32.56 to 32.60. That's 4 pennies. That's $200 per contract traded.
Okay. Can you hear me okay?
Yeah, I can hear you now.
All right. I had the same problem I had this morning for some reason. The audio is not working. Go to webinar on one of the computers.
It's probably the microphone.
Oh, I swapped them around. I don't know. I'll try it again in a few minutes. But anyway, alrighty, if you're ready.
But you sound fine now. Yeah.
Good. Okay. I did the same trick I did this morning. I'm one trick pony. All right. So here we go. Let me bring it over to my side. Bring it over to my side. Oh, what did I just do? I think this is going to be right. Okay. Change presenter to share my screen. I think I did that wrong. No, this one over here. I'll do change presenter to that guy.
Okay. Charts look good. But you can't hear us now. Can you? We can't hear you. Let me send him a message and let him know. Now we can hear you.
You can?
Yeah.
Hang on.
For
There we go.
quite a while there, we could not hear you.
Okay, yeah, I thought I saw it go a little wonky on me. This is a different computer that's going wonky on me. All right, so you can hear me. Let's do this before I lose it again. I'll try not to move around too much.
Japanese fashion retailer ANAP buys $70 million worth of Bitcoin for its treasury.
All right.
Global trend of BTC becoming a reserve asset is irreversible, they say. Okay, go ahead.
It is.
Charts look good.
It is. Excellent. All right, here we go. Good afternoon, everyone. Happy Thursday. Today is the 17th day of April 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button. When you do, it's going to be into this registration page. We're going to have to get that new one from Val so I can load it up today. It's going to bring you to this registration page. On this page, all that we ask for is your name, your email, and your phone number. Down at the bottom, make sure you give us your TradingView login ID. All right. If you don't have one of those, click on this link and get one. Just follow the instructions. It's as simple as that. All right. So we had kind of a wacky day today. I think I had ADD today for some reason. Just today, I was all over the place. We started off the day great. At the high of the day when we started off, we were up 38 ticks on the ES, 75 ticks on the NQ. At that point on gold, we were only up 23 ticks or 33 ticks, and we were down 25 on Russell. But before we were down on 25 on Russell, we were up on those other ones pretty good. That was the high of the day for us, I think. Went downhill from there. Anyway, we ended up with 60 ticks on the NQ, 9 ticks on the Russell, 43 ticks on gold, and minus 17 ticks on the ES. That was our last trade of the day, minus 25 ticks total on the ES. That was a big one. Put us down quite a bit. We ended up with 562.5 on the morning session, 3 minutes, and just one trade to get $275 a contract, or $2,750 with 10 contracts. And we took a total of 28 trades this morning. So on the month, we're at $22,490 over 11 business days, averaging $2,044 per contract per 2-hour business day. On the year, we're now at $106,777, again with one contract over 64 business days, averaging $1,668 per contract per 2-hour business day. Now, following the 24/20 blueprint, if you were to quit trading when you get the goal for the day, for me, that goal is $100 a contract. If you were to quit trading when you get the goal for the day and add one contract per month, so far this year, you would have only had to work 8.6 hours. And you would be up $24,832, averaging $2,865 per hour. Okay. All right. Let's get into it. Now, I was all over the place today because the way we started out the market, we weren't really trending. If I go back to the beginning here, the markets were a little bit choppy at the beginning. So I was trying to incorporate the NQ back into it. Right. It seemed like it was a little choppy. Yeah, right here. It was looking a little choppy. Longer legs, but choppy. So in that case, if the legs are just a little bit longer, but not really long, so you're not getting flat spots, then the aggressive trade with the trend is the one to do. Now, with the gold, I'm pretty sure most of the morning we did just the conservative trade with the trend on the gold. So our first trade here on gold, we picked up 13 ticks. And the next trade, we picked up 10 more to get us to 23. Then I missed a bunch right here. I told you there was a lot of stuff going on for me this morning. It seemed like, I was getting text messages and all this other stuff. And I was trying to do everything. And I was trying to do everything a little bit well. And I didn't do anything well, really. It didn't seem like. Turned out. So we got to break even on this trade. You see, we got into the sideways channel chop right here for a little while. I broke out of that to the upside, and I guess I did do an aggressive trade right here, an aggressive trend trade right here. I had said it should get up to this level. It got up to that level. I said that would be a good spot to do the aggressive trend trade, and I did. And looks like I picked up 10 more ticks to get us to, on gold, we went from 13 to 23 to 34, 36 to 41 to 43. So that was probably going to cut us to 36. This got us to 41. This got us to 43, probably. I can't believe I didn't take another trade after that. Yeah, so there's more in here that I didn't count. A couple of break-even trades. I didn't count that trade, whatever that ended up being. I didn't count that trade, whatever that ended up being. So I actually had a better day than it looks like on paper, on my sheet anyway. So I missed a couple of trades there. Now during the break, you see there were some nice legs in here, some nice movement. So just doing the trend trades in here, the conservative trend trades would have worked out okay as long as you have nice movement and you're getting some flat spots. Regularly getting flat spots on the top side. And then the conservative trend trades are good. Okay, they're usually going to work out pretty well. As long as you get those flat spots on the top side, that means your legs up are being long and not too long. If they're not extended flat spots, that's the kind of market you want to be in. Okay, so there were a bunch more trades in there, and I didn't do any of those. The next market, the Russell. And I was looking for it to pull back down to this level right here, toward the end there. You can see the Russell, we started off here with a stop out. We're at minus 25. Then we had a small aggressive win that got us to minus 21. Then we had a larger aggressive win that got us to minus 11. Then another one right there, regular conservative win, got us to minus 5. Then we had a big win right there that got us to plus 24. That was a 30 tick win right there, I think. And then we stopped out, put us down to minus 1. And then there was one more trade in here that we took. It was a 10 tick trade somewhere. I think it was right in here. We took a 10 tick trade right here. And that got us to plus 9. And that's where we ended it with Russell. Since then, see, when it's just going in and out of the overbought and oversold like this, this is the perfect time to be doing the aggressive trend trades if you wanted to. As soon as it goes into the oversold, you buy the open of the next bar. As soon as it goes into the oversold, you buy the open of the next bar. Into the oversold, buy. Into the oversold, buy. Into the oversold, buy. Until it flips the YBR around. And then when it goes into the overbought, sell. All right. And when it goes back into the overbought, it flips the YBR here. So you just end up with the trade. Right here would have been a break-even trade. If you did the aggressive long trade right there from the open of that bar, you would have had a break-even trade there. But you see it got pretty choppy today. And so in all of that, I was flipping back and forth between aggressive and not aggressive. And you can see I did the divergence trades over here on the NQ. I got rid of the YBR and I was doing divergence trades on the NQ. So I'm sure I was all over the place this morning and it's probably hard to follow. You can see in here, just looking at this right here, this choppiness you see right here, those aggressive trend trades. That means with the YBR direction. So if you blow it, you're taking short trades. As soon as it gets into the overbought, when you blow it, you're selling. As soon as it gets into the overbought, when you blow it, you're selling. All right. And then when it gets above it, as soon as you get into the oversold, you're buying. As soon as you get into the oversold, you're buying. Get into the oversold, you're buying. Right. Those are the kind of trades that work well in there. When it's trending and you have long flat spots in the direction of the trend, then the conservative trend trades work better. But I was jumping back and forth a lot today. So this one here is the ES. Our first trade on the ES was right here. This is where we got the goal for day right here. We picked up 22 ticks on that one. My audio wasn't working, but I was able to bring my Dom over and show the whole thing to everybody. So we picked up 22 ticks on that one. And then on the next one, we picked up 16 ticks to get us to 38. And then we stopped out down to 13. Then I took an aggressive trade to get us up to 25 and a regular conservative trade to get us to 27. Then we took another trade somewhere in here to get up to 33 and then this stop out right at the end of the session. I think that was it, wasn't it? Yeah, that one right there. And we stopped out and it brought us down to 8. It brought us down to 8. And that is where we ended it for the day. It got really choppy in here. Again, if it's choppy like this, where you're not getting any flat spots and you overbought or oversold, switch to the aggressive trend trades. All right. I hope you see that in the room in the morning when you're in the room with me. Right. And that was the yes. So the NQ is next. We ended up having quite a few trades on the NQ. I started out and I wasn't thinking of trading it too much. You see, we had some stop outs in there. Here we go. Our first trade on the NQ was right here. And we picked up 75 ticks on that. The next trade was right here and we stopped out. That put us down to 15. Then we had a 10-tick win. That got us to 25. Then we had a 5-tick win. That got us to 30. Break even. Then we stopped out. That put us to minus 30. And then we got a 75, put us to plus 45. And then we stopped out again. That put us to minus 15. And then we had a 75 right here. That got us back up to 60. And that's where we ended it with the NQ. Right? I think that's where we ended it. Just how we ended it. Okay, so what I was doing with this, you can see where I had these light blue. That means I was doing some sort of aggressive trade in there. I haven't been looking at the question box. Let me bring that up and see if there were any. No questions. Okay, that means I was doing some sort of aggressive trade in here. What I was doing with the NQ this morning, you see I don't even have the YBR on there right now. I was doing the divergence trades. So I was being aggressive in both directions. It didn't matter whether I was going long or short, with the trend, without the trend. I was just being aggressive on it because we were getting a lot of chop. All right, so with that in mind, let's move here during the break. Okay, during the break, with that in mind, you're just looking for the blue to lead into the overbought or oversold. So right here, led into the oversold. I think that went 20 ticks. We can check it right here. Right here. Did that go 20 ticks up to the top? It went 15 ticks up to the top. So that's not enough to get the stop to break even. That would have stopped you out. Right here, you would have gotten it back on that one, because that would eventually move down all the way down here. This right here would have been a stop out. This right here would have been a stop out. So you see when it got flat, and you started to get those long legs and it got flat again. You had to switch tactics. It was tough today. It kept switching like that today. That's what made it tough on me. There were a couple of stop outs, 3 or 4 of them right in there. And that would have been enough to make you not want to trade the NQ anymore. There's another long right there, another long right here, another long right here, and another long right here. That was the bar after where I'm saying right here. Okay. A short right here would have been the bar after. A short right here, the bar after. Short right here, that bar. A short right here on that bar. A long on this bar. That went 50 ticks before it pulled back. And then it would have gone the rest of it right there. A short right here on that bar went 50 ticks. A long on this bar. It looks like it went enough. Maybe not. But anyway, there were a lot of opportunities today. It wasn't a great trading day, right? I mean, besides me being distracted, it wasn't a great trading day because the markets, they couldn't decide whether they're going to trend or not. I'm sure Dwayne's gone over this already, but I'll just show it to you here. See how we're jammed up right here? Let me blow it up. And you can see it just a little clearer. We're jammed up right here. In the black step line and the MA1, the black step line and blue and climbing. We're all jammed up in there. So far, it's looking like it's going to be an up close on the day, but we still have a lot of time left to the day. And there's a lot of stuff going on this afternoon. Not big stuff, but a lot of talk. And if you look at the economic calendar, at the end of the day, we have the federal budget balance. Okay, and that comes out before the markets actually close. Right here at 16:30, the markets, remember, the markets close at 5. So if they show it as low impact, we'll see. But we have all these other speeches right here. I don't know why that must have been added on at the end, that 11 o'clock speech. We have the rigs counts. Those are usually low impact, not anything. The mortgage rates, usually not a big deal. Those have already come out anyway. And the rig counts have too. But I thought we had some more speeches going on today. I thought there were more speeches. I guess not. Maybe it was just after the morning session. This one right here, for instance. And the tips auction. Well, anyway, that's the news for today. And I don't know. Let's look at Monday. Right, we don't have anything tomorrow. And Monday, there's not really anything going on Monday either. We don't have any high impact news. It doesn't look like until Wednesday next week is our next high impact news. So next week's probably gonna be kind of slow. The week after holidays, what the excuse is gonna be, but we'll see. All right, let's get in here and see if we have any trades that we can take. All right, this is what the daily looks like. So the rest of the afternoon is probably going to be pretty slow and dry. I thought we were going to have some news events in there, but it doesn't look like we do. So let's get in here and see if we can take any trades. With all the various bar types, you really like the range bars the best. They give you a good, clear idea of what's going on with price movement. That is correct, Bob. They are, I mean, in my opinion, they are best. They are far superior to any other type of range bar. You know, if you're trading, if you like swing trading and you're doing stuff that you're going to hold overnight, then the range bars are a little harder to work with. I'll say those are the words I'll use, because you don't know how long every bar is going to be. You know, overnight you can have a bar that lasts 2 hours, or bar that, a minute. Whereas if you're doing it on like a 5 minute or a 30-minute overnight, at least you know when to expect some sort of movement in price. But still, the range bars are better, and you can set alerts to let you know when to go look at things. Do you know how to set alerts on TradingView? There's, like, for instance, if you let's look at the daily. Okay, if we go to the daily again and look at this, and by the end of the day, you wanted to know if price got up above the BBC, because this is the high of the day right here, not above the BBC, but above the black step line. If price closed, that's not going to close, but if it got up above the black step line, if you want to have an alert on that, then all you have to do is go here, right? See where the black step line is, wherever it is right here. It's right there, BSL 379.10. That's what that said right now. 379.20 is where the black step line is, right about there. So all you have to do is go here. Let me slide this over. Click on alert, and you have a price alert. And you can do crossing. You can do crossing up value, 379.20. Do it only once. You only want to be notified one time. And you can give yourself a little message right here. You can add a custom name in here if you want. Go to notifications. Now, depending how you have your alerts set up, or how you have your TradingView set up, if you have it on your phone, it'll buzz you on your phone. If you have the app running on your phone, you notify an app, it'll buzz you on your phone. Let you know. It'll pop up over here. If you show toast notification, it'll come over here. If you hit send email, it'll send an email to whatever email you have on file. And the webhook URL, you can use that to send it to other apps. Like you could have a message sent straight to your Telegram channel, your personal Telegram channel, if you wanted to. This is what I use to send things out to Telegram channels, right? To automatically send things to Telegram channels. I use a webhook URL. There's another thing in between there that I pay for to get it from here to Telegram, but it's only like $8 a month or something like that. And it sends from here to Telegram, and it gets it there like almost real time.
Zapier?
I do have Zapier, but I don't use it for that. No, okay. It's called TradingView to Anywhere is what it's called, TradingView to Anywhere. And you can send it to a whole bunch of different things. It doesn't just have to be Zapier. You can send it. I mean, it doesn't have to be Telegram. There's a whole bunch of different things you can send it to. I do actually send it. I send it to spreadsheets. I send it to Telegram. I send it to a bunch of different places, actually, when the webhook is created. It's really a simple process, and it's really inexpensive. You're on Ninja, so you have to modify your support resistance. Okay, well, on Ninja, I'm sure there's an equivalent on the Ninja charts. It might not be as feature rich as that is, where you have all these different ways to notify yourself. But Ninja used to have a whole bunch of bells and whistles, and I'm sure they have something to send an alert when you get a price alert. Okay, but with TradingView, that's what you would do. All right, you just put the alert on there, and I don't think I created one, did I? With alerts, I don't think I just created that. No, I didn't. Okay, but if I did create it, it would be, what was that number that I said up here? 7850. We would just write it in here. Type it in here. 370. I think it was 7950 actually. 379.50 only once. So I'm gonna do crossing up. So when it's crossing above it. All right. If I hit create right now, it's gonna create it. Now the alert is right here. All right, it's an active alert right there. If I want to change that, I just go in here and change it right here. So you can do that for any price. So you don't have to sit there and watch your charts all day. Okay, on a day like today where it's getting really slow. And the only time that I think it's going to happen is probably toward the end of the session. And that would be good for at this point would be maybe to buy some options, because you don't really want to trade over a long weekend like that. You don't want to have something, something open over a long weekend. So if it got up to that level and it failed there at the end of the session, and you could go out, at the end, well, options stop at 4 o'clock, but but if it got up there and it was failing there, and you want to buy some puts because you think it's going to collapse on Monday, because that's what it usually does. I'm sorry, it doesn't usually do that on Monday, but when it bounces off the BBC, it'll usually make a run down and make another leg down like this. I think that's kind of what I said earlier this week when I drew this stuff in here. I was looking at this leg length right here, from here down to there, and looking for that to repeat itself, and that's what this was right here, and it did repeat itself. Okay, so if you take that, now it extended it. Let's just extend it all the way. Well, hey, let me grab another one. All right, so if you go from here where it went to all the way down to here, and then you take that little piece of information that the market gave you, and you put it over here, this is where it should go to. All right, if it's going to continue down, it should go all the way down here next week. Right, that's what we should see next week at some point. So, put option if that were the case. Now, if that does not happen, there are so many things it has to go through here. So there's going to have to be something significant that's going to have to happen to make this thing go up. Right? There are so many things that's going to go through. Like there's a fib thing right here, right? 38%, I think, right there, right up above the black step line. And you have the black step line, the high of the day, fib thing right there. You have, crunch this up. I thought it was MA1 BBC cross. Yeah, back here, there's an MA1 BBC cross right here. There's another one right here, right in the middle of all this stuff at 367.75. There's an MA1 BBC cross right in here, right at the high of the day. So there's a whole bunch of things that are in there that it's got to get through to get up above that. Now, when it gets up above it, it has a little bit of space to run, but not a lot. Not like this down here. This should run, if this breaks down below the MA1, below the blue and climbing right there, if it breaks down below that, it should immediately go down to here. And then you got to look back quite a ways to find some support, right? This is what I did based upon the action that we have, and that pretty much matches up with this level right over here. Okay, that's pretty close. You could have a wick that goes through that, comes down to this level where there was a whole bunch of buying pressure before. Okay, there were no trades. That's why I'm talking so much about this stuff, because this is just stuff that you could do at the end of the day today. Yeah, well, patience and discipline. That's where most people fail, honestly. The trade setups are there, and people can understand every bit of the trade setups, but then they're not patient, and they force trades, and they end up making mistakes. So something like this, I mean, you can do it right now. You can go out and buy some put options right now. Some cheap put options that are out of the money. Somewhere down here. It's gonna be pretty cheap. That expires, say. Now you don't want to pay too much for time, but maybe a week, maybe Friday, or maybe on Wednesday next week. And if over the holiday, over the weekend, the sky falls when the markets open up, because the option markets don't open up until Monday morning. When the option markets open up Monday morning, if price is down here, your option is going to be worth many multiples of what you paid for them right here.
Keep in mind, most countries other than the U.S., Monday's a holiday.
Is it really on Monday as a holiday? Okay.
Most countries, well, not the U.S. We take ours on Friday, they take theirs on Monday.
Kind of like Boxing Day at Christmas, right?
Yeah.
All right, well, there's another reason to have it out to Wednesday. Day trading does have the action. That's right. But I'm giving you an alternative given the slow markets that we have right now.
If you're looking for action, the markets is not the best place to get your adrenaline rush. Should be like working in a factory.
Yeah. It should be the same thing day after day after day. That's why I was off today, because it wasn't the same thing today. I kept having to switch around and do different things because it was going from trending to choppy and choppy to trending. normally it's more of one and a little bit of the other. Either it's a lot of times. Oops, my audio's still working. It looks like it is. I just whacked my microphone. It's a little bit of trending. We're gonna. Okay, good. Well, it's only going to last another 3 minutes here. Good. Well, the markets. What I was saying is, usually you're going to have either a lot of trending and a little bit of chop, or a lot of chop and a little bit of trending. Usually it's a lot of chop and a little bit of trending. But lately we've had, a medium amount of both today is what we've had. So I was flipping back and forth between different types of trade setups to try to accommodate it. And I saw different things happening in the market. And that's what made it so complicated. Yeah, I just got the grass. Yeah, I just bought a whole pallet of mulch. So that's my plan for the weekend. Some of you say, well, why don't you just go get 2 yards of it? And my response is that if I buy a pallet of it in bags, I can drop the bags where they need to be. I don't have to shovel them. The way I do it. And I handle it once. Like right now, when I go and get it, I'm going to have them take a forklift and put it on a trailer. And I'm going to bring the trailer and drop it all over my yard. Put the bags where they need to be. I just got to open them up. I only said that because Bob said he's going to cut the grass. All right. It's 1:28. This right here, if you give a down close, is on the NQ. It's not great. I would rather have the entry be right up here. All right. If you did the optimum short, the aggressive short trade, didn't really have one, but if you were to do the aggressive short trade from right in there, up here at the top, that would have been the place to do it. Other than that, we don't have anything. We're below the YBR. So all of these, and none of them are in the overbought, so we don't have any trades there. That was the closest thing we had to a trade. And if I put the context on there, we are below the YBR. So if I take slingshot off of there, then you have an aggressive short from right there, or conservative short from right here. Either one of those. The aggressive short would have been the one to go with, I think. Swing out. Okay, I'm going to delete this because I don't really want that showing up on my phone. All right. Reminder, guys. The deal that they have right now. The deal
I was offered was 80% off.
Well, it's 70% off a premium. It's 80% off of the next level up, is what I saw. But that deal is only going on for another couple of days, I think. I don't know why it didn't show up here, but that was the deal that it was 70% off a premium. So premium ends up being like $17.95 a month if you buy another year right now. And the next level up was 80% off, and that ends up being like $47.97 a month. And then the one above that is 70% off, and that ends up being really close to the 80% off one. I think that's why they did it. You know how they do the plus and the premium, so they're like $1 off or something like that. They did that with the next two levels too. That's
when I logged into TradingView yesterday, I didn't get this page. I got a pop-up that says you can renew.
Yeah,
now, and it said you'll get 80% off, and we'll add it on to your current subscription.
Let's see if I go here.
But
I've already got plans.
I got 264 days left in my current subscription, so I'll just wait for the Thanksgiving. Yeah. The Thanksgiving Christmas special.
I don't know what we have left on this one. I guess I can go see that right now. But my other one I have until the end of 2026. This one, we hit save on this. This one we have until, let's see, comes in billing. See, it didn't give us the option on this one. I don't know why it gave me the option on the other one.
You got 268 days left. I think that's pretty much exactly what I have.
Yeah, I think we did it at the same time. January 10th, 2026. So we're good for a while. All right. Well, I guess that's going to be it, guys. I'm going to wrap it up and pass it back out to Fabulous Phoenix, Arizona. If you haven't taken a free trial, I'm going to go, I'll redo this webpage now. I'll go make the link myself if I have to. I don't know if I'll need it yet, but be able to go to mytradingiq.com in about a half an hour. We'll go to mytradingiq.com and click on this link, and it's going to have all this stuff filled in here with the new stuff. All right. I'll do all that right now for you.
Now, keep in mind, we won't be here tomorrow, so
Right.
your 5-day free trial actually becomes 8 days. So if you sign up for the trial today, get your indicators indicating today, you'll have tomorrow and Saturday and Sunday, because some markets never sleep. So you can fool around with the indicators, but then your actual trading will begin Monday morning and run all the way through next Friday.
Okay. Yes, that is all true. And I will get that done over the next half an hour here, so be able to go out there and do that. And Kevin asked a question here, if you don't mind, an odd question. I was looking at a little margin, so I've been looking at the N6A micro Australian USD. Using a range of 7 to 9. I was wondering what you thought. It's very slow, but tends great. So low risk, fewer trades, and seems works well with the indicators. Well, the thing about the smaller timeframes like that, if you're on the 7 range or something like that, it's going to take forever to make any money. So you have to have multiple contracts on the micros too. If you go to larger timeframes on the micros, check it out on a larger time frame, Kevin, and see. Okay, because I know your thing was with the margins. So you have the same margin with a single contract, but if you go to a larger time frame, you're not going to make money any faster, but you'll have be in fewer trades. Because the things with micros, you don't want to overtrade, especially with the micros, because you'd end up with commissions. Okay, so you're better off taking fewer, bigger trades with the micros if you can. Does that make sense?
Liquidity is a factor as well.
The Australian US dollar might, but for other things, like the NQ, micros are more liquid than the regular. It's like 3 or 4 times as liquid as a regular, but with the Australian US dollar, that micro might not be very liquid. So you have to check that out too. Yeah, make sure you check that out. And the way to look at that, Kevin, is to take your micro, take your regular contract, like here, let me show you. Just do it for you. AUDU. Oh wait, you did the M6A, right? Okay, so let's just go with 6A. 6A. Australian dollar futures. Okay, do 681. That's going to give us the front contract. And put on a 5 minute.
Keep in mind, you can't trade that symbol, guys, but you got to put in the actual symbol to place a trade.
Which is probably the M contract right now.
Yeah, it is.
Okay, but good. So looking here and see where the volume is on a 5 minute. Right, with the volumes, we're more likely to have some more liquidity, right? And then if you put it on the same thing, the M6A, see, keep in mind before I hit enter on this, the volume is right here at 12 o'clock and it's like at 9:30 for the most part. And the volume is still right there at 12 o'clock and here at 9:30 and even a little earlier at 8 o'clock.
What's it like overnight?
Well, this is the overnight right in here. It's not bad here at 11 o'clock, 10 o'clock, 11 o'clock. Well,
that's
I say not
their,
bad.
That's
I say
their
not
day.
Bad. Yeah.
Our night session is their day session. So.
Yeah. Well, let me say, I say not bad, but that's good over here. Look at the volume over here. That may not be that great either. 196 right there on that bar. So that was a 5 minute bar. 196 on that one. So it's not great overnight, but it's not horrible. Then you go into the daytime, like this one right here had 412, and that's our busy time. So it's not bad overnight. I mean, you can get in there and place a trade or two, and that's what I meant about.
Is that the micro volume or the regular volume?
Yeah, this is the micro. Let's go look at the regular because I didn't look at the regular. So let's look at the regular. Same time, same everything. Okay, the regular volume it's more. You can see it's multiples. the regular volume is multiple. So you were right about the liquidity, Dwayne, on the Australian dollar. But you can see in here that it's still about the same times as when the volume picks up, and liquidity is going to be there about the same time. Okay, so that goes to support my whole thing about fewer trades, fewer bigger trades. Okay, if you're doing 2 contracts and you did between 20 and 50 bucks, that's good with a micro. It's a buck a tick, so you're making 20 to 50 ticks. 2 contracts, it's 10 to 25 ticks. That's pretty good. All right, well, there you go. That is my analysis for that, Kevin. All right, again, we'll pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. And we'll see. Okay, upcoming events. Val did not create the one for next week yet, so I'm going to create the one for next week, and I'll put it on the website now. Okay.
Recap of the morning session.
Today it took 3 minutes and 1 trade to get to $2,750 with 10 contracts on.
Good job.
Thank you.
All right, guys, we've covered all the markets. If you missed it, you can always catch it later on the YouTube channel. We still got resistance at the step line and the 38% reverse fib. Got support at the low of the day. We still have an inside day, which tells me that the deep pockets are probably taking today off as well as tomorrow. And we got support right here, 52.48, and resistance at the high of the day, which again, it's the high of the day because it ran up into resistance times 2. So to become a member, go to mytradingiq.com and read about who we are, what we do, watch the videos. And then if you want to become a member, send an email to support@cfrn.net. In the subject line, put, I want to become a member. Yeah, what were you saying?
I'm publishing that right now for next week.
In the subject line, put I want to become a member. In the body of the email, put your name and your phone number. I'm not going to call you. We don't have a phone room or a sales department. But we will send you an email that explains what it means to become a passport holder and everything you have access to. And there'll be a link in that email that you can click to become a member. You're going to get 2 hours of live interactive training every trading day. You'll also have access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a member, you'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. For over 15 years now, we've provided those for our members every Monday. You'll get the Logic 247 alerts around the clock. Concierge trade alerts the second they're published. You'll be able to attend the members only workshop every Thursday night, except not tonight, because there's no workshop tonight and we won't be here tomorrow. We're wrapping it up for the week. We'll be back on Monday. And last but not least, you get the golden key that opens all the private channels in Telegram. For those on the trial, we have private channels. We have public channels. We also have private channels. Once you become a passport holder, you'll have access to all the channels. Everything a trader needs, all under one roof, one low price. Okay, let's wrap it up with our good word for today. double jeopardy. Romans 5:1. Therefore, having been justified by faith, we have peace with God through our Lord Jesus Christ. In the legal system, there's something known as the law of double jeopardy. It means that, except in some very specific circumstances, you can't be tried twice for the same crime. Now let's apply this principle to your salvation. Jesus has already been tried and punished for your sins. All of them. So don't let Satan, the accuser, convince you that God will also punish you for them and send you to hell. Christ's last words on the cross, "It is finished," John 19:30, are translated in the Greek text as, you're going to love this, paid in full. All your sins, past, present, and future, were atoned for at Calvary. Think of the word finished. Imagine a master carpenter putting the finishing touches on a beautiful table. Would you take a wood plane and say, I think I can make this look a little better and give it a little more value? The carpenter would say, stop. If you touch it, you'll ruin it. And they would be right. The same goes for your salvation. You can add nothing to it. But by trying to merit it by your performance and good works, you can definitely take something away from it. The word justified simply means declared or made righteous in the sight of God. The moment you place your trust in Christ as your Savior, that's how God sees you. Romans 5:1-2. Therefore, having been justified by faith, we have peace with God through our Lord Jesus Christ, through whom also we have access by faith into this grace in which we stand and rejoice in hope of the glory of God. How can you stand before God clothed in grace? By faith in Christ alone and nothing else. That's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.